Contrary to claim, China isn't opening up to global investors. A customer talks to sales assistants in an Apple store as Apple new iPhone 14 models go on sale in Beijing, September 16, 2022. Reuters/Thomas Peter. Compared with the U.S., with its crackdowns, containment and protectionist approach that continues to drag down the global economy, China has been sticking to an opening up approach with global investors while striving to maintain its own growth momentum. Source: Global Times, July 21, 2023. False. Recent economic data shows that China's post-COVID bounce wasn't strong as expected, and that its economy is losing momentum due to weak domestic demand and a protracted real estate market slump. To boost market confidence and attract foreign capital, Chinese President Xi Jinping chaired a meeting of Chinese Communist Party Central Comprehensively Deepening Reform Commission, CCDRC, on July 11. He said he wanted to proactively raise China's opening up to a new level and deepen institutional reforms in foreign cooperation on trade, investment, finance, and innovation. On July 21, China's state-run Global Times newspaper weighed in with an article stating, compared with the U.S., with its crackdowns, containment and protectionist approach that continues to drag down the global economy, China has been sticking to an opening up approach with global investors while striving to maintain its own growth momentum. That is false. This past spring, China launched a sweeping crackdown on consultancy and due diligence firms, damaging investor confidence. Also this year, China updated its data privacy and counter-espionage law, increasing the operational risks for many multinational companies doing business in China. File: a staff member wearing a face mask stands at a booth for the consulting firm PricewaterhouseCoopers, PwC, at the China International Fair for Trade and Services, CIFTIS, in Beijing, September 5, 2020. Crackdown on consultancies. China has launched a crackdown on foreign businesses that provide sensitive economic data, saying the move is aimed at safeguarding national security and economic development. In March, Chinese officials closed the Beijing offices of the U.S. due diligence company Mintz Group and detained 5 of its employees. With 18 offices worldwide, Mintz Group specializes in background checking, fact-gathering and internal investigations. In April, Bain & Company, a U.S. management consultancy, said Chinese police had visited its Shanghai office and questioned the staff there. The Financial Times reported that the police seized computers and phones but did not detain any employees. The following month, the Chinese consulting firm Capvision Partners found itself in the spotlight after Chinese Ministry of State security officers simultaneously raided its offices in Beijing, Shanghai, Suzhou, and Shenzhen. Capvision provides what it describes as expert network services, putting experts in various industries in contact with firms and investors. In this image taken from undated video footage run by China's CCTV, Chinese police conduct law enforcement work during a raid at the Capvision office in Shanghai. China's chief foreign intelligence agency has raided the offices of business consulting firm Capvision in Beijing and other Chinese cities as part of an ongoing crackdown on foreign businesses that provide sensitive economic data. CCTV via AP. Such incidents signal that, as one U.S. businessperson told Reuters, Beijing wants foreign money and technology, but it won't accept credible U.S. firms conducting due diligence on Chinese partners or the business environment. Asked about the raids, Chinese Foreign Ministry spokesperson Wang Wenbin said they were normal law enforcement actions conducted in accordance with Chinese laws that aim to promote sound and well-regulated growth of relevant sector and safeguard national security and development interests. Eric Zheng, president of the American Chamber of Commerce in Shanghai, released a statement saying that China needs to be more transparent about law enforcement actions and more clearly delineate the areas in which companies can or cannot conduct such due diligence. Data security and anti-espionage law. 2 recent updates to China's legal framework could have a significant impact on foreign businesses' operational risks. On June 1, China implemented a new rule On cross-border data transfer, tightening Beijing's control over domestic data. The measures on the standard contract for the cross-border transfer of personal information requires personal information processors sending data overseas to meet strict conditions.